Wake up. You are getting slaughtered in the market because you are playing a game you do not understand. You think checking the ticker every 5 minutes makes you a trader. It makes you a sucker. I have built billions by ignoring the noise and focusing on the math that actually matters. Most of you are looking at stock prices. Stock prices are a distraction. They are the shiny object meant to keep you poor. While the big players take your lunch money, I do not care about your charts. I do not care about what some guy on TV says. I care about 4 specific numbers. These numbers are the difference between a legacy of wealth and a lifetime of debt. If you do not know these 4 metrics, you are not investing. You are gambling with your children's inheritance. But before I give you the keys to the vault, look at yourself. If you are watching this and you have not subscribed to Wealth Strategy Room yet, you are making a conscious choice to fail. You are literally stealing million-dollar insights from me right now and refusing to do the bare minimum to support your own growth. And by not subscribing to Wealth Strategy Room and hitting that like button, you are telling the world that you prefer being a victim of the economy rather than its master. You are failing your family and your future. If you cannot even commit to a free subscription for the best financial education on the planet, then close this video and go back to your 9 to 5. You do not deserve this level of success. For those of you who actually want to win, listen closely. I've analyzed thousands of businesses, and I have seen what scales and what implodes. There are 4 numbers that act as a lie detector for any stock on the planet. If these numbers do not align, I do not care how hot the company is. I walk away, and right now I'm going to reveal the first metric that will change how you look at a balance sheet forever. You think you are smart because you found a stock with a low PE ratio? You are not smart. You are a pawn. PE ratios are the easiest thing in the world for an accountant to manipulate. You can hide a lot of sins in the earnings line of an income statement. Depreciation, amortization, one-time charges, and stock-based compensation are all levers they pull to distort reality. It is all noise designed to make a failing company look like a rocket ship on paper. The core problem with the average retail investor is that you are looking at the scoreboard instead of the actual game being played on the field. You are looking at the results of the past year instead of the fuel that drives the future. The foundational truth of business is simple and brutal. If a company does not generate more cash than it spends, it is a ticking time bomb. I do not care about your vision. I do not care about your disruptive technology or your charismatic CEO. If you cannot show me the green, you are out. This is where most of you go wrong. You fall in love with the story. Stories are for bedtime. Numbers are for bank accounts. You need to understand that every single stock you buy is a fractional ownership of a real-life business with real-life expenses. If you own the dry cleaner down the street, would you care about what the neighbor thinks it is worth next week? No, you would care about how much cash is in the register at the end of the day after every single bill is paid. That is the only thing that keeps the lights on. That is the only thing that pays dividends. That is the only thing that allows a company to reinvest and crush its competition. The first number I look at, and the number you better start obsessing over, is free cash flow, not earnings, not revenue, free cash flow. This is the actual amount of cash a company has left over after paying for its operations and its capital expenditures. It is the money that can actually be used to reward shareholders or pay down debt. If this number is negative while the company is bragging about record revenue, they are bleeding out. They are a vampire. They are sucking the capital out of your pocket to keep their failing machine running. You are being lied to by every analyst who tells you to look at EBITDA. EBITDA is a total scam. It ignores the very things that kill businesses, debt and taxes. You need to look at the cold, hard cash. If a company cannot produce it, they should not have your money, period. You have been trained to look at the wrong things because the people selling you the stocks want you to stay confused. Confusion is profitable for them. It is expensive for you. We are going to strip away the jargon and get down to the bone. If you cannot do simple addition and subtraction, you have no business in the market. You are just donating your hard-earned money to people like me who actually do the work. If you do not grasp this foundational truth, you are already finished. Now that you understand that free cash flow is the only oxygen a business has, let us escalate the stakes, because finding cash is just the first step. The second step is figuring out who that cash actually belongs to. You are out here buying shares of companies that are essentially bankrupt but are propped up by cheap debt. You are swimming in a pool of sharks wearing meat pants and wondering why you are getting bitten. Most people lose their life savings because they do not understand the difference between scaling a business and drowning in leverage. You buy the dip on a falling knife because it looks cheap, completely ignoring the massive anvil tied to the company's ankles. It is financial suicide. But stop right there. Look at your screen. If you have been sitting here absorbing these billionaire level insights and you still have not hit subscribe to the Wealth Strategy Room channel, you are part of the problem. You are literally stealing my advice. I'm giving you the exact blueprint that creates generational wealth, and you are too lazy or too entitled to hit a free button. That is pathetic. By not subscribing to Wealth Strategy Room and liking this video right now, you are proving that you lack the basic integrity and action-taking mindset required to be rich. You are actively choosing poverty. You are looking your family in the eyes and telling them their financial security is not worth a single mouse click. Do not steal my time. Subscribe to Wealth Strategy Room immediately. It is the only logical choice if you actually want to survive what is coming. If you are still here and you are actually committed, let us look at the second number that will save your portfolio: total debt to free cash flow, not the generic debt to equity ratio they teach in useless MBA programs. I do not care about the equity on a balance sheet. Equity is an accounting fiction that can evaporate in a single bad quarter. I care about how many years it will take this company to pay off every single dime of its debt using only the cold, hard cash it generates. If a company has $1 billion in debt and generates $10 million in free cash flow, they are working for the banks. They are not working for you. You are buying a piece of a business that does not even own itself. When interest rates rise or the economy tightens, these highly leveraged companies are the first to get slaughtered. The debt becomes an executioner. The executives will issue more stock to cover their massive interest payments, diluting your shares into oblivion. You will watch your net worth cut in half while the CEO still collects his bonus. I look for companies that can wipe out their entire debt load in under 3 years of cash flow. If it takes longer than that, the risk is too high and you are playing Russian roulette with your retirement. You know how to find the cash, and you know how to make sure the banks do not own the company. Now we reach the turning point. This is the hidden mechanic that separates the businesses that just survive from the businesses that absolutely dominate and compound wealth for decades. Most of you have never even heard of this metric, and that is exactly why the elite investors keep getting richer while you are stuck trying to day trade garbage stocks on your phone. You think growing revenue is the ultimate goal. You think if a company is selling more product, the stock has to go up. Wrong again. Any idiot can grow revenue if they spend enough money doing it. I can sell dollar bills for 90 cents all day long and my top line revenue will be astronomical. I will be famous for my massive sales volume, but I will be bankrupt by Friday. The secret Wall Street does not want you to focus on is capital efficiency. It is the raw mechanical engine of true wealth creation. And how efficiently can this management team take a single dollar of capital and turn it into more than $1? This brings us to the third number: return on invested capital, ROIS. This is the holy grail of investing. This is the ultimate lie detector for a CEO. Return on invested capital tells me exactly what percentage of return a company generates on the cash actively invested into its operations. If a company takes $100 million and builds a new factory, acquires a competitor, or launches a software platform, ROIC tells me if that was a genius strategic move or a catastrophic waste of your money. If a company has a high ROIC, say 20% or more, it means for every dollar they plug back into their machine, they are getting 20 cents back in pure profit every single year. That is a compounding machine. That is a snowball rolling down a mountain, getting bigger, faster, and more unstoppable. A company with a persistently high ROIC does not need to borrow massive amounts of dangerous debt to grow. It organically funds its own explosive growth. The average retail investor ignores this metric entirely because it requires actually understanding the underlying business model. You would rather look at a squiggly line on a stock chart or listen to a talking head because it is lazy. But if you buy a company with a 5% ROIC and their cost to borrow money is 7%, they are literally destroying intrinsic value every single time they try to expand. They are burning your equity in a furnace. The absolute turning point in your financial life happens the moment you stop buying stocks based on the emotional hype of what they might do and start buying businesses based on the mathematical reality of how effectively they deploy capital. A high ROIC creates an impenetrable moat. It proves they have real pricing power and a massive competitive advantage. Let me tell you exactly what you are doing wrong every time you open your brokerage app. You are treating the stock market like a casino. You read a headline, you see a stock running up 3%, and your heart starts beating faster. You get FOMO, you jump in because your broke friend at work told you it was going to the moon, and you are letting emotion and adrenaline dictate your financial future. That is exactly why you are losing. You buy the hype and you sell the panic. The institutional investors, the billionaires, the algorithms, they are sitting there waiting for retail investors like you to make those emotional mistakes. They feed on your ignorance while you are praying for a short squeeze or a magical product announcement. We are stripping the company down to the studs. We are looking at the cash flow, the debt structure, and the capital efficiency. You are gambling. We are operating. And speaking of operating, what are you doing right now? The people inside the Wealth Strategy Room community are taking action. They are absorbing these metrics, they are applying them to their portfolios, and they are building actual, undeniable wealth. Meanwhile, you are sitting there hesitating. You are watching a billionaire give you the exact playbook, and you still have not hit the subscribe button. Why? Because you are scared of success? Because you secretly want to stay comfortable in your financial struggle? If you do not subscribe to Wealth Strategy Room and like this video right now, you are making a deliberate choice to let the wealthy get wealthier while you stay exactly where you are. Every second you wait is money out of your pocket. The winners are inside Wealth Strategy Room taking notes and making moves. The losers are watching passively and doing nothing. Which one are you? Hit subscribe. Do it now. Do not steal this education and walk away. You hesitate because you do not trust your own judgment, and you do not trust your judgment because you do not have a system. You buy a stock and immediately start checking the price every 10 minutes. If it drops $1, you sweat. If it drops $5, you panic sell at a loss. Then you watch it rebound a week later and hate yourself. This cycle of psychological torture happens because you do not actually know what the company is worth. You only know what the stock price is today. You are completely blind to the actual value of the asset you just bought. You are a passenger in a car with no steering wheel, hoping the road does not end. When you know the numbers, the real numbers, a price drop is not a reason to panic. It is a reason to celebrate. It is a discount on a cash printing machine. But to know if it is a true discount, you need the final piece of the puzzle. You need the ultimate reality check to tell you if the price you are paying makes mathematical sense. Here's exactly what you need to do right now if you want to stop bleeding cash and start building a fortress. You need to close the chart, stop looking at the squiggly lines, The fourth and final number you must calculate before you ever hit the buy button is the free cash flow yield. This is the ultimate reality check. It is the bridge between the cash the business generates and the price the market is demanding you pay for it. Free cash flow yield is simply the free cash flow per share divided by the current share price. And if you bought the entire company today, took it private, and put it in your pocket, what percentage return would you get in pure cash in year one? If that yield is 1 or 2%, you are radically overpaying. You could get more putting your money in a basic risk-free government bond without taking on the massive volatility of the stock market. I want a high yield. I want 5, 7, 10% or more, and I want to know that the cash generation is massive compared to the price tag. This is your mandate. As soon as this video is over, you are going to open your brokerage account. You are going to look at every single stock you own. You are going to pull up their financial statements and calculate these 4 numbers: free cash flow, total debt to free cash flow, return on invested capital, and free cash flow yield. If you own a company that has negative free cash flow, sell it immediately. I do not care if you're down 50%, take the loss, learn the painful lesson, and stop funding a dying, broken business. If you own a company where it will take them 10 years to pay off their massive debt load with their current cash flow, sell it today. You are holding a live grenade with the pin pulled. If the return on invested capital is below 5%, get rid of it. And the executive team is burning your house down. You need to purge the garbage from your portfolio right now. Cash is a perfectly valid position. Sitting in cash and waiting for a phenomenal company to drop to a massive free cash flow yield during a market panic is how you win. It requires patience. It requires extreme discipline. It requires you to act like a savage business owner instead of a degenerate casino gambler. You need to stop buying fractional shares of 50 different companies you know nothing about. Find 5 to 10 businesses that absolutely crush these 4 metrics. Companies that generate massive cash, carry 0 dangerous debt, compound capital highly efficiently, and are trading at an undeniably high yield. Buy them heavily, hold them aggressively, let the mathematical engine of compound interest do the heavy lifting while the rest of the retail market panics over news headlines. This is the exact blueprint. It is not magic. It is ruthless math. Change your entire strategy today or accept your permanent financial mediocrity. You have the 4 metrics, you have the blueprint, but here is the final warning, and it is the absolute biggest trap of all: your own weak mindset. The moment you start using these numbers, you are going to feel totally left out. The market is going to rally on some absolute garbage news, and you are going to sit there in cash, watching some worthless meme stock rocket up 200%. Your broke friends are going to brag about how much money they made buying a company with negative cash flow and massive debt. The financial media is going to parade analysts across your screen telling you that this time is different, that the old metrics do not apply to this new revolutionary technology. That is the trap. The second you abandon the math because you feel the fear of missing out, you are dead. You will buy at the absolute top. The smart money will dump their shares directly on your head, and you will be left holding a bag of ashes. Wall Street has built a multi-trillion-dollar industry on making you feel stupid. They use complex jargon and flashy charts to convince you that you cannot do this yourself. They want you to surrender your capital to them so they can charge you massive management fees while giving you entirely mediocre returns. These 4 numbers are your shield against their lies, but none of this matters if you do not have the spine to stand alone. And speaking of having a spine, look at the subscribe button below this video. If you have watched me break down the exact mathematical formula for generational wealth and you still have not subscribed to Wealth Strategy Room, you are a complete tourist. You do not want to be rich. You want to be entertained. You are treating your financial survival like a television show. It makes me sick. The winners in this world recognize value and they seize it immediately. I am handing you the keys to the kingdom for absolutely free, and you are too paralyzed to click a button. If you do not subscribe to Wealth Strategy Room and like this video right now, you are proving beyond a shadow of a doubt that you lack the killer instinct required to succeed in this brutal economy. You are choosing to remain prey. Hit the button, commit to your own success, or close the tab right now and accept your fate as a financial victim. Oh, the choice is entirely yours. You can go back to guessing. You can go back to letting talking heads dictate your portfolio. You can go back to buying shares of companies that are slowly bleeding to death simply because you like their product. Or you can become ruthless. You can draw a massive line in the sand today and vow to never buy another stock unless it passes the cash flow, debt, return on invested capital, and yield tests. The math does not care about your feelings. The time for watching videos is officially over. You have the exact 4 numbers that built my empire and the empires of ruthless operators around the world. Every single minute you spend staring at this screen from this point forward is a minute you are wasting. The market does not reward good intentions. The market rewards cold, hard execution. You can memorize these 4 metrics all day long, but if you do not open your portfolio right now and start cutting the dead weight, you are just a spectator in the brutal sport of capitalism. Spectators pay for the tickets and players get the massive checks. Stop making excuses. Stop waiting for the perfect market conditions or the next big bull run. The perfect condition is right now and today. When you finally decide to stop being a victim and start acting like a savage business owner, go to your brokerage accounts immediately. Run the math. Purge the garbage. Buy the cash machines. Do not come crying to anyone when the next crash wipes out the gamblers. You have the blueprint. You know exactly what to do. Now get off YouTube, get to work, and go build your wealth.